Hi, this is Chris German from The Apartment Dealer. My partner Deep and Shaw and I are going to walk you through what has happened over the course of the last 12 months in multifamily properties here in Long Beach and the surrounding cities. And we're going to take a look at multifamily values, rental rates, vacancy rates, and then take a look to the future. Can the last 12 months, the direction of the last 12 months, give us any indication of where we will be the next 6, 10, and 12 months, again, when it comes to property values, rental rates, and vacancy rates? Now, we're not going to be relying on our own judgment alone. We're actually going to be pulling in data from CoStar Group. CoStar is the nation's leading authority when it comes to the analytics of the commercial real estate market, not just in multifamily, but within industrial, retail, and so forth. And CoStar makes a living selling the analytics. They do not make a living, like I, selling properties. So in other words, they don't have a dog in the race. Whether you want to buy, sell, or hold, that's not their concern. Their concern is gathering the real data of what's taking place on the ground, so to speak. And with respect to our video here today, with respect to multifamily, what is taking place? What's the real data tell us last 12 months? And as we look forward here within 2022, let's go ahead and dig in.
As we take a look at Long Beach and its submarkets, there's one metric that stands out far more than any other, and that's vacancy rates. Vacancy rates are actually the lowest they have ever been in over the past decade for Long Beach. And really, we've seen this in the entirety of Southern California. And as we take a look at it, one of the metrics, even within that metric, that stands out more so than another, is that the lowest vacancy is in the Class B and C properties, not in the Class A properties. And with only 300 new units in development in the Class A properties, CoStar sees that trend continuing over the coming years. And so what does that mean for a majority of you that own either a B or C class asset in Long Beach? Well, it's good news. And here's the chart for reference. So if we take a look at the vacancy over the past 10 years, from 2010 all the way to 2020, they've hovered between 5% to a low of 3%, and then all the way back up to almost 5% during the pandemic. Last year, in 2021, we saw a record low of 3.3% as a vacancy rate, and CoStar predicts it will be even lower this year and going forward. Now, coupled with the vacancy rates, rental rates have also been increasing. As we move back to this chart, really Long Beach had seen a stagnation in rental rates for quite some time. In 2021, post-pandemic or mid-pandemic, 6.6% increase in rents year over year. This year, beginning of 2022, has started off strong as well, as in the first few months, we've seen a 7.2% increase in rental rates, but CoStar sees this dying down just slightly, and the year finishing off with a 5.8% rental rate increase year over year. Now, taking a look at the actual rents of studios, 1 bedrooms, 2 bedrooms, and 3 bedrooms, on average in the entirety of Long Beach, we see that studios are at $1,279, 1 bedrooms at $1,616, 2 bedrooms at $2,095, and 3 bedrooms at $2,420. Again, this is an average across the entirety of Long Beach. It's not taking into account the different submarkets, the location, and the asset type or unit type, but this gives you a good idea of where the general market is. Now, Long Beach, I'm sure as you're watching this and as you own or know of it, is not the same all the way through. There's some markets in Long Beach of which carry different rents, vacancies, and what have you. So as we dice this into the different submarkets, for the ease of education and the savings of time, we'll be taking a look at Long Beach over these 3 submarkets, which are the Belmont Shore East Side, the downtown and downtown adjacent, and the north side. So let's get started with Belmont Shore and East Side. As you can see on the chart, the price per unit average in Belmont Shore and East Side was $299,000, almost $300,000 over the past year. Cap rates had an average of 4.2%, and the sales volume was a staggering $345 million. As we move to downtown, downtown adjacent, $241,000 price per unit on average, 4.48% cap rate, a little bit higher, and $173 million sales volume. And lastly, the north side, $224,000 price per unit, 4.57% cap rate, and a $44.5 million sales volume. So taking a look at the numbers from the vacancy rates to the rental rates to the price per units and cap rates, one can see that Long Beach is standing strong as an investment this year, last year, and over the next few years, as CoStar has also forecasted the same. So I hope this helps.
Okay, our next corridor is the 710-91 corridor. This is comprised of Bell Gardens, Commerce, Cudahy, Huntington Park, Maywood, Paramount, and Southgate. Why do we lump the cities together the way we do? Because typically the price per unit, cap rate are similar. Tenant demographic is similar, rental rates are similar, so it's the right way to piece together the cities in order to have an understanding of how, if you're trying to get large portions of LA County broken down, how to do so. You want to use those similarities. Okay, the cap rate in this area on average is 5%. Now, have properties sold at lower cap rates? Yes. Have properties sold at higher cap rates? Yes. The average is 5%. Sales volume, 123 million. So you see that's 3 times the East LA corridor, and this is more on average of what you're likely to see, this type of sales volume, if not more. And the average price per unit, 180,000. So when we take a look at the rental rates across the board, rents are on the upward trend. We're talking about the 710-91 corridor. Let's say in Maywood, $1,200 for a studio, $1,450 for a 1-bedroom, $1,700 for a 2-bedroom, $1,950 for a 3-bedroom. Now let's take a look at Huntington Park. $1,275 for a studio, $1,550 for a 1-bedroom, $1,800 for a 2-bedroom, and $2,100 for a 3-bedroom. And the other cities are going to be in between there. The average for the corridor, for that entire corridor, all the cities involved, is about $1,200 for a studio, $1,400 for a 1-bedroom, $1,680 for a 2-bedroom, and about $2,000 for a 3-bedroom. Okay, the Southeast Los Angeles submarket. Again, they cut up their map a little bit differently, but you can see what cities are all included. 2021 vacancy rate, 1.9%. That's going to decline to 1.4% this year. Annual rent growth last year was 3.6%, and they're projected to see a growth in the submarket to 6.5%, double of what it was last year. So if you own in this area, you have to be excited about that. And then your cap rate, 4.4% in 2021, and they're projecting 4.4% in 2022. So property values are going up. Now, the 605 corridor is comprised of Bellflower, Downey, La Habra Heights, La Mirada, La Puente, Lakewood, Montebello, Norwalk, Pico Rivera, Santa Fe Springs, and Whittier. The average cap rate here over the course of 2021, 4.4%. Sales volume, 209 million. Price per unit, 274,000. All right, 605 corridor. Take a look at, say, Pico Rivera, $1,400 for a studio, $1,625 for a 1-bedroom, $1,925 for a 2-bedroom, $2,100 for a 3-bedroom. Then you take an area like Lakewood, $1,275 for studios, $1,425 for 1-bedrooms, $1,850 for 2-bedrooms, $2,100 for 3-bedrooms. So we have our average for the corridor, $1,284 for studios, $1,487 for 1s, $1,844 for 2s, nearly $2,100 for 3-bedrooms. In South Los Angeles. Now, when we hear South Los Angeles, for most of us, we might think of like South LA. That's not how they're not using the term that way. Focus on the map so you know what cities are included. In 2021, the vacancy rate, 1.6%. 2022 will stay about the same. 3% is an average that typically is used. So when you're at 3% or less, that is in a landlord's favor. Annual rent growth over the course of 2021, they saw an average of 5.4%. They're forecasting 6.3% this year. So I just want to point this out again, that last year we saw historic gains in rental rates. Across the nation, it was 11%. That's the highest number ever recorded for rental growth. What's the second highest year? It's actually going to be this year. That's what's projected, is that 2022 will be the second highest year ever recorded for rental growth. You're starting to get that firm footing we're looking for. You're starting to feel secure about being involved in the market this year. I hope so. And cap rate, 4.2 was the average cap rate in this corridor in 2021. And we're looking at the same cap rate of 4.2 this year, except rents will grow by 6.3%. So values are going up. I hope you found this information informative. If you did, then I would suggest that you visit our YouTube channel, youtube.com/The Apartment Dealer. And you'll find hours, hundreds of hours actually, of content geared towards investors like you, whether it comes to real estate taxation, real estate law, especially here recently with the eviction moratoriums, rent control, and everything else, and just everything that's involved in owning multifamily properties. On that channel, we bring you the resources, information, and the network of professionals that can assist you as a landlord as you build what I call your financial legacy in multifamily properties. Again, be sure to visit our YouTube channel, subscribe, leave us a comment. What else, what other type of content can we offer that would be helpful to you? And I look forward to speaking to you soon. Again, Chris German from The Apartment Dealer. Till then.